Good morning, everybody. Welcome to the Daily Covered Caller. Got a good show for you today. We're going to talk about the Defiance reverse split. First off, they announced a 1-for-3 reverse split. We're going to look at the ETF heat map and see which ETFs are moving, which sectors of the economy are moving today. We're also going to look at the Defiance and YieldMax and see how they're doing so far in the day with their strategies, their covered calls, and see if they're in the money or whatever. And then I'm going to talk about a video that I'm going to release later on in the day, and we're going to maybe look at some earnings trades and that kind of stuff. All right, so first, let's do this. Defiance announces 1-for-3 reverse stock split of QQY, JEPY, and IWMY ETFs. Tidal Financial Group announced today that the Board of Trustees of Tidal has approved a 1-for-3 reverse split of the Defiance QQY, JPY, and IWMY ETFs. The effective date is, I believe, August 1st. What is a reverse split of the ETF? Is a corporate action that reduces the number of outstanding shares of the ETF while proportionally increasing the ETF's net asset value. What is the timing and effective date of the reverse split? The reverse split will become effective prior to the market open on August 1st. All right, so this ought to be fun on the spreadsheets, but basically I think it's going to make the price will be trading around 50, but you'll have a third as many shares. So, all right, inverse indexes is what's moving today. Short triple Qs. So it looks like the triple Qs are down 80, almost 1%. The SPY's down 0.5%. It was up earlier in the day. I just don't like the market action lately. We're coming into kind of a weak time of year, and anyway, who knows? All right, well, let's see what else is going on. So inverse semiconductors, money's coming out of semiconductors today. Money is going into small energy stocks, regional banks, some REITs and stuff. That's why the Russell has been holding up stronger. I mistakenly said it was because the Russell had some Bitcoin exposure. I thought Russell had some Bitcoin miners that were up huge the day Bitcoin was up 10%. And they may have one or two, but it's not. It's the regional banks. This is what's holding the Russell up. KRE. These are regional banks. These are banks that, not multinationals, is not Chase. It's, I'm trying to think of an example, but I can't. But regional banks. And they're still holding up pretty well today. Also, utilities are up today, which is a defensive. XLU is utility sector, and energy. So that ought to bode well for USOY if you're a USOY holder. So now let's talk about the individual funds. Let's start with Defiance. Well, heck, we can just start with USOY. I'm really liking USOY lately. All right, so they closed. They had 1,223 contracts, the 81 strike. They sold them for 83 cents. Unfortunately, they had to close those suckers for $2.09. It created a $154,000 loss. That happened yesterday afternoon. Well, they simultaneously sold the same amount, 1,223, 79.5 strike options for Friday, which is tomorrow. And they received 99 cents. So their break even 78.51. I think it's easier to look at it graphically. It'd be easier to look at it graphically if I'd updated the graphics. But in any event, it's really easy. So all they did, they actually did this Tuesday night, and somehow I missed it. My apologies, but Tuesday night, right here, is kind of a bad trade. Now, it's not their fault. I mean, but when it was down here, they covered this option for $2.09. They sold it when it was up here for 90 cents or something. Market sold off, which is not what you want when you have a put. So they had to cover it for $2.09. It didn't expire till Wednesday. They would have waited one day longer if they would have used the prayer method on this one that I'm always being critical of. But if they would have used the prayer method, the price came right back and they could have got out of the option for like 30 cents or something. But what even compounds the problem is when they sold this option, they wrote a 79.5. So now they're capped out at a lower level. This was a bad trade. It's not their fault. It happened. I mean, it's part of the game when you're doing covered calls. Sometimes you come out ahead, sometimes you come out behind. This is how the covered call game beats you, is on one of these trades. All right, I'll put this exactly to scale later, but just for now, that may be, just know that may be approximate, but that's pretty close. Gosh darn it, you got to be kidding me. Okay, so we're going to make this green for intrinsic. Okay, well, so now the problem is, yeah, when they moved it down, it's double problem. They took a bigger loss on this one than they had to. Of course, they can't predict the future, so this is, but and then they rolled down when they sold this one. So they're capped at 79.5 now. So whatever. Okay, so now let's go to triple QY. Now NASDAQ selling off. It was selling off yesterday. This is the one I was saying. I'm not liking the chart action. This is what I was referring to. Anyway. Short-term momentum is obviously down. Maybe in around here somewhere. We'll find some support and bounce. Who knows? Not a prediction. Okay, so as far as the strategy goes, though, at the close last night, they wrote this option, the 19,890, it looks like. So they have a pretty nice buffer. They received like more than $100, but it's not enough buffer right now. They wrote that option and they received $141, which is a shitload of money. But unfortunately, right now, that sucker's 271 points in the money. So they're trying to make 1.8 million, which would be a huge score, but they're behind 1.6 right now. Yesterday was the worst loss this fund has taken since I've been watching it. And it's also the worst loss in the NASDAQ since February of 2022. I almost couldn't believe that. I swear I read that last night. It was late. I should have clipped it and put it in this morning's report. I'm sorry, but it was a shit show yesterday. I think, they lost 258 bips yesterday. They went from being up 30 cents to down 10 cents. So that's how covered calls work. That's how income strategies work. They have lots of little wins, lots of times and then they interspace gigantic losses. But that's kind of if you do covered calls, you kind of know that's going to happen, and that's what you sign up for. You can also do things like hit 8 or 9. They had like, what is that? That's like 10 wins out of 11 right there or something. So in any event, it's kind of how it goes, but they're on the other end of that now. So let's look at JEPY. Now, JEPY did not do as poorly yesterday. JEPY sold options yesterday for 17, had to buy them back for 86. They lost $1.4 million. That's still pretty poor, though. They only lost 1.2, 123 basis points. They went from being up 27 cents a share on the month to only up 8 cents. Okay, well, anyway, now today they sold options for $20, which is a shitload. And right now, unfortunately, would have to buy them back for $49. So that sucks. Let's look at the chart real quick. All right, you guys get the picture there. Now let's look at Russell. What do you guys want to bet it's stronger? Always the strongest or the weakest. Now today it would be in the category the strongest because it's only down 65 basis points. Okay, so let's look at the spreadsheet. Okay, so on the spreadsheet, they sold options for $22.60. Right now, they would have to buy them back for $24. You're trying to make $1.4 million, but they're losing $120,000 for the month. This fund's up 28 cents earnings per share. This fund makes a great case for diversification. Lots of months it's making people wish they wouldn't have this fund, but this month it's saving the other two. Excuse me. Basically, the more the merrier on here. $1 million allocation. If you're going to have high yield funds, I say no more than 20%. So that'd be 200,000. So get you 10 of them, maybe 20,000 a piece, and 10 of them. There's so many good ones out there. I mean, between JP Morgan and Blacks. I mean, there's so many good ones out there. Get you The more the merrier, but in any event, to some extent. I mean, over diversification is a problem too. Anyway, okay, so but it's this fund's looking good today. The dividend estimate 78 cents, which is low, but least of the problems right now. We've already looked at USOY. Just to reiterate, USOY is they're at max profit right now. They're doing their job. The spreadsheet just doesn't update live. All right, so now let's go from here to the YieldMax funds. Let's start with Tesla. We look at Tesla for the sake of Tesla and crash, the pairs trade, and for the sake of people that have Tesla or a crash. Now, these guys, Tesla rolled some of their options into next week, so that's the higher strike. Unfortunately, earnings happens right here. I need to make a note on the chart, and I'll do that later, but earnings happens right there. These expire right here. Okay. All right. Well, anyway, these guys are in an ideal situation for their covered calls and their covered puts. Crash is an inverse covered put fund, but for once it's doing all right too, because I mean, their covered puts aren't maxed out. They have room for appreciation if Tesla starts dropping, and I'm surprised it hasn't yet with what the market's doing, but that's good news. But if Tesla starts dropping, Crash does have some room for appreciation before the fund, the ETF is tapped out. Right now, Crash is down 1 point, and Tesla is up 2 points. So people that are playing the pair are up a point, which is really good. You're just trying to break even when you play the pair. But some days you're also down. So days you're up kind of have to offset the days you're down. Okay, so now let's take a look at AMD. AMD's been selling off lately, along with NVIDIA and along with the NASDAQ, the triple Qs. All right, so these guys, their covered calls are in no danger. They have plenty of room for capital appreciation should the market decide to turn around. I bet you AMZ or Amazon's in the same situation. Big cap, big tech is just not doing well. Big tech is not doing well at this point. Some rotation may be going into, obviously it would appear, the Russell, going into the Russell, coming out of big tech. Maybe it's nothing to be worried about, but given the time of year and stuff, I just don't think it's a bullish sign, but that's just me. All right, so let's look at Coinbase. Now we look at Coinbase. Coinbase also has an inverse fund. So they have Coney, which is the bullish fund, and their covered calls maxed out. So Coney's should not appreciate any more this week. Coinbase doesn't really look like it, but it's down 5% today. I guess you have wow. All right. Well, that's actually helping Coney out, because Coney the managers at Coney would like the price to return to 230. I spoke about the prayer method. This is a time where maybe it is working for these managers. All right. But on the inverse still has plenty of room. Coin keeps dropping, and the inverse fund, which ticker is fiat, still has plenty of upside. Okay, so now let's look at NVIDIA. The high yield fund name is NVIDIA. There is an inverse fund, but not an inverse yield fund yet. But there's several inverse, 2x inverse, but just not that pays a dividend. All right, so these guys have plenty of room if the market would turn around and cooperate. Now let's look at Mr. MicroStrategies. All right, so these guys have had their strike blown out since first thing Monday morning. They were never out of the money. They sold options later in the day on Friday, and Monday morning they came in and boom, they're blown out, and they're still blown out. And they haven't rolled yet they haven't rolled yet, I do not believe. All right. So let's look now. Let's do this. Let's see what else topics are. Oh yeah, I'm working on. Okay, there was a. Oh my gosh, I love internet rumors. There's a crazy rumor, and I'm making a video on debunking it. Anyway, we can. Anyway, you guys can watch that when it comes out. Um, so charts, meme trades. Okay, so let's do this now. Let's look really quick. I'm going to make a separate video, but I just want to check the prices of my meme trades. All right, so the market's off today. So these $1 million baby trades that I've been showing people how to do to hedge portfolios. I have different sizes. That's why I have this guy has a $500,000, so he has a smaller hedge. But the main one is the main one is this one. I need to erase the other ones. This is all right. So anyway, it's doing well today because the market's down, and it's a hedge thing now. So we'd expect it to do well. Anyway, I'll make some more content on those because it's not too late to hedge, and the market doesn't look real positive to me, and the market's still very high, and hedging is still fairly affordable, not as affordable as it was a few days ago. But I'm going to make a content for people that missed out last week. I'll make some content, and that'll be out before the end of the week, either today or tomorrow, on if you guys are interested or not. So also on earnings trades, these are just fun. These trades are these small trades that I'm showing everyone how to do. This trade's working out perfect. It's a double diagonal. It's this was a little trade, had a couple $100 risk, and it worked out perfectly as it's designed. And right now, it could be taken off for about a 50% profit. But this is on GameStop. So that expires tomorrow. So if you had this on in real life, it'd be time to take it off because you can't really make much more money. You can hold it till tomorrow if you wanted to take a chance and hope GameStop goes up another 12%. And if it does, you could cash this out, for more money tomorrow. You could cash it out for $250 or something. Up to you guys. But anyway, those double diagonals are great little trades on meme stocks. And you can also do it on a pre-earnings play. And there's one on that I showed and make content on Tesla. Yeah. So this is Tesla has earnings next Tuesday. So this trade will stay on until next Tuesday. Time will pass. It's the same thing. It's a double diagonal. It's easy trade to do. Sell a strangle and you buy another strangle in a different week is one way to do it. But anyway, the trade itself is easy, but this one's designed to be taken off Tuesday. They have earnings. I think they have earnings after the bell on Tuesday. So this is designed to hold into here, and wherever Tesla's price is, we're hoping Tesla rallies even a little bit more, I say more. We're hoping it rallies. It hasn't yet. Rallies into earnings. If it rallies into earnings, this thing could be worth $600. If it goes up 10%. But even if Tesla drops 10% into earnings, let's say that wouldn't be good for this, but this thing would lose $373. But you could see the risk reward is asymmetric. If Tesla stays steady into earnings, this makes money. I like these asymmetric type trades. This is an income trade. It's a form of income trade, just like a covered call's an income trade. But anyway, people don't talk about double diagonals, and I want to be the double diagonal evangelist. I love them. They're great trades. Okay, so I'll make more content on that if you guys like that. All right, so let's see what else we had to talk about. But also, yeah, be looking for content on this $1 million baby. These trades are really good ideas too, in my opinion. If you have some money in the market and you've been all in growth and you're up, $300,000-$400,000 over the past couple of years, you might want to watch my video on how to hedge until the end of the year. I think between now and the end of the year, there's several, events that can be problematic for the market. Okay, so I appreciate you guys being here, and I'm going to let you guys go. How's that sound? All right. Have a good day.